The Weyerhaeuser stock I shared with you is now up 30% and making subscribers serious money. Today, I'm bringing you something that could deliver even bigger returns. A stock under $5 that's down 92% from its all-time high in an industry that's about to explode in 2026. This is a Chinese EV company with 45,000 employees trading for less than the price of a coffee. Before you dismiss this as just another fallen angel, the catalysts I'm about to share could make this your biggest winner of the year. Welcome back to Velocity Stocks. I'm Sterling, and I hope you're enjoying my best stock picks and profiting alongside this community. Whether it's blue chips, penny stocks, or contrarian plays like today's pick, this channel is about finding value before the masses catch on. Before we dive in, hit that subscribe button and smash the notification bell. I release new stock analysis every week, covering opportunities across all sectors and market caps. The subscribers who act on these picks early are the ones making real money. Today's stock is trading at $4.68, and it's one of the most controversial names in the market right now. Let's get into it. Here's what Wall Street doesn't want you to know. The electric vehicle sector is entering its most explosive growth phase ever. We're not talking about potential anymore, we're talking about mass adoption happening right now. The global EV market is projected to reach $1.6 trillion by 2030, growing at a compound annual rate of 18%. But here's the kicker. China represents over 50% of global EV sales. While American investors obsess over Tesla, the real EV revolution is happening in Asia. Three massive catalysts are converging in 2026. First, government subsidies. China just extended EV subsidies through 2027 with $72 billion in funding. Second, battery technology breakthroughs are bringing costs down 40%, making EVs cheaper than gas cars. Third, infrastructure expansion. China is installing 10,000 charging stations per month. This isn't speculation. This is a structural shift happening at scale. And there's one Chinese EV company that's been beaten down so badly, it's now trading at a valuation that makes Tesla look expensive. Most investors are too scared to look at Chinese stocks right now. That fear is creating the opportunity. Today's stock is NIO Inc., ticker symbol NIO, trading on the New York Stock Exchange as an American depository receipt. Founded in 2014, NIO is China's premium electric vehicle manufacturer, often called the Tesla of China. They don't just make cars, they've created an entire ecosystem with battery swap technology, autonomous driving, and a luxury brand positioning that rivals Mercedes and BMW. Headquartered in Shanghai, NIO employs 45,635 people and operates manufacturing facilities, battery swap stations, and showrooms across China and Europe. This is not a startup, this is a scaled operation delivering over 160,000 vehicles annually, with revenue exceeding $7 billion. Now let's talk about why NIO could explode from $4.68. I've identified 7 major catalysts that the market is completely ignoring. Catalyst number 1, absurd valuation. NIO is trading at $4.68. That's 92% below its all-time high of $62 in June 2021. This is a $12 billion market cap for a company doing $7 billion in annual revenue. For comparison, Tesla trades at 8 times revenue, NIO is trading at 1.7 times revenue. This is a depressed valuation, screaming value. Catalyst number 2, battery swap technology. NIO has built over 2,000 battery swap stations that can replace your entire battery in under 3 minutes. This solves the biggest problem with EVs charging time. No other manufacturer has scaled this technology. This is a competitive moat. Catalyst number 3, European expansion. NIO launched in Norway, Germany, Netherlands, Sweden, and Denmark in 2024 to 2025. They're not just a China story anymore, they're going global. European revenue could triple by 2027. Catalyst number 4, autonomous driving partnership with NVIDIA. NIO vehicles use NVIDIA's autonomous driving chips. As AI and self-driving technology improves, NIO is positioned as a direct beneficiary. Catalyst number 5, volume explosion. In the past 6 months, NIO's stock price has ranged from $4.45 to $7.89. Just 6 months ago, this stock was trading 68% higher than today. The technicals show a consolidation pattern near multi-year lows, exactly where you want to buy. Catalyst number 6, average volume of 41 million shares daily. This is institutional-grade liquidity. When sentiment shifts on Chinese stocks, NIO will be the first name institutions rotate into. Catalyst number 7, Chinese government support. NIO is considered a national champion. The Chinese government has a vested interest in NIO's success and has provided billions in financial backing. This is too big to fail in China's EV strategy. Before you think this is just about China risk, understand that NIO's worst-case scenario is already priced in at $4.68. The market is valuing NIO as if it's going bankrupt tomorrow. The asymmetric risk-reward here is extraordinary. Let's break down the numbers so you understand exactly what you're buying at $4.68. Current stock price $4.68. This is a stock that traded at $62 just 3 years ago. We're not talking about a speculative peak. At $62, NIO had real revenue, real vehicles, and real growth. From today's price, a return to even half of all-time highs would be a 563% gain. Market capitalization, $12 billion. Now, before you think that's too large, consider this. Rivian, an American EV startup that's losing money and producing far fewer vehicles, has a market cap of $15 billion. Lucid Motors, another American EV company with minimal production, trades at $5 billion. NIO is delivering 160,000 vehicles annually with positive unit economics, and it's being valued like it's on the verge of bankruptcy. Average daily volume, 41 million shares. This is critical. You can move in and out of large positions without slippage. When institutional sentiment changes, this liquidity means explosive moves. All-time high analysis, NIO peaked at $62 in June 2021. That wasn't irrational exuberance. NIO was growing 200% year over year and expanding globally. From $4.68, a return to $20 would be a 327% gain. A return to $30 would be 541%. And if NIO reclaims its all-time high, that's a 1,225% return. Price range analysis. 1-month range, $4.56 to $5.50. We're currently near the bottom of this range, an ideal entry point. 6-month range, $4.45 to $7.89. At $4.68, we're just 5% above the 6-month low. Risk-reward is heavily skewed to the upside. 1-year range, $3.14 to $7.89. The 1-year low of $3.14 represents peak fear. We've bounced 49% from that low, but we're still 68% below the 1-year high. 5-year range, $3 to $60. NIO has proven it can trade at $60. The question isn't if it can get there, it's when. Technical setup. NIO is forming a multi-year base near $4-5. This is classic accumulation. Smart money is quietly building positions, while retail investors are terrified of Chinese exposure. When this breaks out above $6, the move to $10 could happen in weeks. The math is simple. You're buying a scaled EV manufacturer with $7 billion in revenue, 45,000 employees, proprietary battery swap technology, and government backing for $12 billion. This is the definition of a contrarian opportunity. Now let's talk about the risks, because NIO is not for the faint of heart, and I need you to understand what you're getting into. This is not financial advice. I am not a licensed financial advisor. Everything in this video is for educational purposes only. You must do your own research and consult with a professional before making any investment decisions. You could lose your entire investment. NIO is a Chinese company trading as an ADR. That means regulatory risk, delisting risk, and geopolitical risk. If US-China tensions escalate, NIO could get delisted from the NYSE. If that happens, your shares could become worthless or extremely difficult to sell. Chinese company risks are real. Accounting standards are different. Transparency is lower. The Chinese government could nationalize the company or change regulations overnight. These are not theoretical risks. They're real possibilities you must consider. NIO is not profitable yet. While unit economics are improving, NIO is still burning cash to fund growth. If they can't raise capital or achieve profitability in the next 12 to 24 months, the stock could go lower, much lower. Position sizing is critical. Do not put more than 3 to 5% of your portfolio into NIO. This is a higher risk, higher reward speculative position. Treat it like a call option. Invest only what you're willing to lose completely. Volatility is extreme. NIO can swing 10 to 20% in a single day based on headlines about China, EV subsidies, or trade relations. You need the stomach to hold through violent price swings if you want to capture the upside. Do your own due diligence. Read the SEC filings. Understand the ADR structure. Know what you're buying. This is not a set it and forget it blue chip. This is a calculated speculation on a beaten down industry leader. Alright, let's recap why NIO is on my radar at $4.68. We've got China's leading premium EV manufacturer with 45,000 employees, $7 billion in revenue, and proprietary battery swap technology that no competitor can match. The stock is trading 92% below all-time highs and near multi-year lows. Chinese EV subsidies are extending through 2027, battery costs are plummeting, and NIO is expanding into Europe. Conservative price target, $8, that's a 71% gain from current levels. This simply gets us back to the 6-month high and represents a reasonable recovery if sentiment improves. Aggressive price target, $15. That's a 221% gain. This assumes NIO continues growing deliveries, expands European market share, and Chinese stocks come back into favor. Moonshot scenario, $30, $40, that's a 541% to 755% gain. If NIO achieves profitability, scales battery swap globally, and recaptures even half of its previous valuation, this target is achievable within 24 to 36 months. Now here's what I need you to do. If you found value in this analysis, smash that like button. It tells the algorithm to share this video with more investors who need contrarian opportunities like this. Drop a comment below and let me know. Are you brave enough to buy NIO at $4.68? Or is Chinese stock risk too much for you? What's your price target? I read every single comment, and I love debating investment theses with this community. Subscribe if you haven't already, and hit that notification bell. Next week I'm analyzing a small-cap biotech stock with FDA approval coming in Q2. You're not going to want to miss that catalyst. And remember, do your own research. Cross-reference everything I've said. Understand the risks before you invest a single dollar. NIO is not for everyone. But for those willing to embrace calculated risk, the asymmetric reward potential is enormous. This is Sterling from Velocity Stocks. Let's catch these stocks in motion. I'll see you in the next video.